Elliot, with your expertise in this space, let's make sure our nomenclature or my nomenclature is correct. There's digital, there's crypto, stable coin, and all the other thing is all on this thing called, or potentially all on this thing called blockchain. But can you just give us some definition so that we can move forward without making any errors?
Yes, and I think it's important because you spoke about digital money,
Yes.
which is using kind of the Apple Pay as an example. That is, in fact, digital and it is money.
Yes.
But it's not digital currency. Crypto are digital tokens that supposedly have a value issued by a private issuer based on their network of which the tokens are a part, having some type of economic or financial value. And so all of that is, we're not going to speak about today. We're speaking just about money and how money is used and what form it takes. And you mentioned stablecoins, and we'll talk about it maybe a little bit later in detail. But one thing I didn't speak about in the beginning was I talked about all these intermediary ways of paying. The one non-intermediary way of paying is, of course, using cash.
Yes.
And what is cash? Cash is central bank money. It's a liability of the government. You can always take your dollar bills and go to the central bank and pay your taxes with it. It's legal tender. All the other types of money that we have are not. They are actually liabilities of a bank, of a credit card company, or of a payment provider, or of some of the tech companies. It's not actually central bank money, which does make a difference. So it's not actually genuine currency. It's a digital representation of some private liabilities. Now, for us, you just talked about it in terms of using it every day. It's great. Why do we need anything else? I mean, it's super user friendly. You have your phone, and that's all you need. And the reality is, for payments in developed markets, we do not necessarily need anything else. The only thing we maybe would like is to pay a little bit less. I've talked about the transaction costs.
Right.
But in terms of user friendliness, a lot of it works already. Now, that's in developed markets and in China and some other places. But there's many countries where their payment systems are not very robust. The digital forms are not working very well, and blockchain could actually, going from having no landline phones to cellular technology, this could also allow them to leapfrog a lot of systems. And finally, just because we will talk about stablecoins. Stablecoins are just private money again that are very efficient and have a lot of attractions. I think in the intro you mentioned I'm an advisor on the Global Industry Association of Stablecoins. They serve their own purpose, but they are also not central bank money. They are a form of private money and have their function.
So is it fair to say that what we are trying to put our arms around is how do we take the money we know, which is pieces of, I call it paper, dollars or pounds or whatever, and digitize it. And by doing so, we'll cut out, as a form of payment, we'll cut out a lot of middlemen or middle people. And it's primarily, so far our discussion has been to save transaction costs. So bring inflation down, make it more efficient. But from a practice standpoint, it seems like we are not going to visibly or practically gain any more ease. So from a consumer standpoint, unless we understand that we're really cutting cost, the efficiency is not any greater. Am I thinking correctly?
Yes, and that's also partially what makes this controversial or hotly debated as to why do we even need this. The consumers are pretty happy.
Yes.
So the reality is, I think the dirty secret here is that some central banks are pushing for a retail CBDC, a consumer CBDC, only to put pressure on the financial industry to lower costs.
I see.
The threat of entry should basically already solve the problems of the high transaction fees. But that's for the consumer CBDC. What we haven't talked about, which is I really want to spend most of the time speaking about here, is the wholesale CBDC. So the digital currency that operates in the background, behind the layers of financial architecture, where the technological features enable certain things that we haven't been able to do in the past, or to do them much better. And that's really the promise of the CBDC. So less so on the retail side, maybe just kind of as a as an engine for change and improvement of our existing stuff. But the wholesale part, the one that basically will be used by uh, banks, clearinghouses, asset managers, and so forth, that is where the big excitement lies.